Welcome back to the channel. Today we're diving into 3 powerhouse companies set to transform their industries and potentially supercharge your portfolio. We're talking about a biotech innovator, a retail juggernaut, and a tech giant that touches nearly every aspect of our lives. These aren't random picks. They're leaders with proven growth, strong financials, and clear paths for expansion. Hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. If you're ready to discover life-changing investment opportunities, you're in the right place. Let's jump in. First up is Vertex Pharmaceuticals, ticker VRTX, a true game-changer in the world of biotech. Founded in 1989 and headquartered in Boston, Vertex has grown from a small startup into a global leader in transformative medicines. Their relentless focus on innovation and patient outcomes has set them apart in a highly competitive industry. Vertex dominates the cystic fibrosis market, turning a once fatal disease into a manageable condition for tens of thousands of patients worldwide. Their breakthrough therapies have dramatically improved life expectancy and quality of life, making Vertex a lifeline for families affected by this genetic disorder. This leadership position generates massive, reliable cash flow, providing a solid foundation for future growth. This financial strength fuels their innovation engine, allowing them to invest heavily in research and development. Vertex pours billions into R&D every year, supporting a culture where scientists and researchers are empowered to pursue bold ideas. Their state-of-the-art labs and collaborative teams are constantly pushing the boundaries of what's possible in medicine. Their pipeline is loaded with high-impact programs, a non-opioid pain treatment in late-stage trials that could revolutionize pain management, gene-editing therapies for sickle cell disease, and beta thalassemia that offer hope for a functional cure, and even a bold attempt at curing type 1 diabetes. Each of these programs targets huge underserved markets and could transform the standard of care. Vertex's partnership with CRISPR Therapeutics has already produced 𝗗𝗟𝗏𝗗𝗘, a one-time gene-editing cure for certain blood disorders, proof they're at the cutting edge of medicine. This collaboration showcases Vertex's ability to identify and execute on breakthrough science, bringing life-changing therapies from the lab to the clinic. Financially, Vertex is a fortress. They boast a war chest of cash, minimal debt, and a track record of double-digit revenue growth year after year. This financial discipline gives them the flexibility to weather industry challenges and seize new opportunities as they arise. Unlike most biotechs, Vertex is already highly profitable, generating consistent earnings and reinvesting those profits for even bigger wins. Their business model is built for both stability and expansion, making them a rare breed in the biotech sector. The market still values Vertex mainly for its cystic fibrosis franchise, but the real upside is in their pipeline. Each new therapy in development represents a potential multi-billion-dollar opportunity, and the breadth of their research means Vertex could become a leader in several new therapeutic areas. As the need for advanced treatments grows with an aging population and rising rates of chronic disease, Vertex is perfectly positioned to lead. Their focus on high-impact, high-need conditions ensures they'll remain relevant as healthcare evolves. Their robust portfolio of patents and deep scientific expertise create a formidable moat, making it tough for competitors to catch up. Vertex's intellectual property strategy protects their innovations and secures their leadership for years to come. Of course, risks exist. Clinical trial failures, regulatory hurdles, and pricing pressures are part of the game. But Vertex's diversified pipeline and focus on breakthrough therapies help mitigate these risks, giving them multiple shots on goal. The non-opioid pain market alone is worth tens of billions, and their diabetes program could be a true game-changer if successful. These programs have the potential to open up entirely new revenue streams and further cement Vertex's leadership in biotech. Vertex Pharmaceuticals is currently valued by the market at about $118.68 billion, trading at a price-to-earnings ratio of roughly 32.58, with earnings per share around $14.21. In 2024, the company generated about $11.02 billion in revenue, and on a GAAP basis, it posted a net loss of about $536 million. A reminder that even high-quality biotech franchises can see reported profitability swing when major pipeline and acquisition-related costs hit in a single year. For long-term investors, Vertex offers a rare blend of stability and explosive growth potential. It's a company that rewards patience, with a history of delivering for shareholders while making a real difference in patients' lives. This isn't a speculative biotech, it's a foundational holding for the next decade. Vertex stands out as a blue-chip name in a sector known for volatility, making it a smart choice for those seeking both safety and upside. As their pipeline matures and new therapies reach the market could reward Vertex with higher valuations and even greater returns. The next wave of innovation could propel the company to new heights. The management team has a track record of smart execution and long-term vision. Their ability to balance risk and reward, while staying focused on patient needs, is a key driver of Vertex's ongoing success. If you want exposure to the future of medicine and a company with real staying power, Vertex deserves a spot on your watch list. Their commitment to innovation, financial strength, and patient impact make them a standout in the industry. The story is just beginning, and the next chapters could be even more exciting as Vertex continues to push the boundaries of what's possible in healthcare. Keep an eye on Vertex as we head toward 2030. With a robust pipeline and a proven track record, they're poised to shape the future of medicine for years to come. Let's move to our next pick. Next, let's talk about TJX Companies, ticker TJX, the off-price retail king behind TJ Maxx, Marshalls, and HomeGoods. If you've ever wandered into one of their stores, you know the feeling. Racks and shelves packed with brand-name goods at prices that seem almost too good to be true. TJX has built a retail empire by making bargain hunting not just a necessity, but a fun and addictive experience for millions of shoppers. While many traditional retailers struggle to keep up with changing consumer habits and online competition, TJX thrives by turning excess inventory into treasure hunt bargains. Their stores are constantly refreshed with new finds, creating a sense of urgency and excitement that keeps customers coming back week after week. It's not just about low prices, it's about the thrill of discovery, and that's a powerful draw. Their model works in any economy. People love deals in good times and need them in tough times. Whether the economy is booming or facing headwinds, shoppers flock to TJX stores for value and variety. This resilience has helped TJX outperform many of its peers, even during recessions or periods of high inflation. Supply chain chaos? For TJX, it's an opportunity. They scoop up discounted goods from manufacturers and other retailers, then pass the savings to shoppers. Their flexible buying strategy allows them to react quickly to market changes, securing deals on everything from designer fashion to home decor. This agility is a huge advantage in today's unpredictable retail landscape. With over 4,700 stores and plans for thousands more, TJX is expanding rapidly in the US and abroad. Their footprint stretches across North America and Europe, and they're constantly scouting new markets and opportunities for growth. Each new store opening brings in fresh customers and strengthens their brand presence. Their international brands like TK Maxx and HomeSense are growing fast, and new store concepts keep the business fresh. By adapting to local tastes and experimenting with different retail formats, TJX stays ahead of trends and competitors. This willingness to innovate is a key reason for their ongoing success. Financially, TJX is a rock. Strong revenue growth, consistent dividends, and aggressive share buybacks reward long-term investors. Their stock has delivered impressive returns over the years, and management's commitment to returning capital to shareholders is unwavering. For investors seeking both growth and income, TJX stands out in the retail sector. Their balance sheet is healthy, and they generate plenty of free cash flow to fund expansion and shareholder returns. This financial strength gives them the flexibility to invest in new stores, technology, and supply chain improvements, all while maintaining a disciplined approach to costs. Unlike most retailers, TJX is largely Amazon-proof. The thrill of discovery and ever-changing inventory can't be replicated online. Shoppers love the tactile experience of browsing aisles, hunting for hidden gems, and scoring deals they can't find anywhere else. This in-person excitement is something e-commerce simply can't match. Their broad customer base, from teens to families to bargain-hunting fashionistas, gives them stability and resilience. TJX appeals to a wide range of demographics, ensuring steady foot traffic and sales across economic cycles. Whether you're shopping for back-to-school clothes, home essentials, or a last-minute gift, there's something for everyone. As department stores decline, off-price retail is gaining market share, and TJX is the clear leader. Their ability to attract both value-conscious and brand-savvy shoppers puts them in a unique position to capture business that's shifting away from traditional retailers. Their scale, vendor relationships, and brand recognition create a powerful competitive moat. Suppliers want to work with TJX because of their massive reach and reliable payments, which means TJX often gets first pick of the best deals and merchandise. Operational excellence, fast inventory turnover, and minimal markdowns drives profitability. Their teams are experts at moving merchandise quickly, keeping stores fresh and reducing the need for deep discounts that can hurt margins. While competitors like Ross and Burlington exist, TJX's size and international reach set it apart. Their global scale allows them to negotiate better deals and spread best practices across markets, making them the dominant force in off-price retail. The formula is simple: open more stores, expand internationally, and return cash to shareholders. This strategy has fueled decades of growth and continues to drive strong results. It's worked for decades and shows no signs of slowing down. As long as consumers crave value and variety, TJX will have a place in the retail landscape. TJX offers defensive stability and steady growth, a rare combo in retail. Their ability to weather economic storms and adapt to changing trends makes them a reliable choice for investors. TJX Companies sits with a market value of roughly $174.85 billion, a price-to-earnings ratio near 34.76, and earnings per share around $4.52. In 2024, TJX delivered about $54.22 billion in revenue and produced roughly $4.47 billion in net income, showing what consistent traffic, sharp merchandising, and disciplined off-price execution can look like at scale. For buy-and-hold investors, it's a smart, durable growth opportunity. With a proven track record, strong leadership, and a business model built for the long haul, TJX is well-positioned for continued success. The next decade looks bright for TJX. As they continue to innovate, expand, and deliver value to both shoppers and shareholders, their future is as promising as ever. Now, let's look at our final pick. Our third pick is Amazon, ticker AMZN, the tech titan whose growth story is far from over. Founded by Jeff Bezos in 1994 as an online bookstore, Amazon has evolved into a global powerhouse, touching nearly every aspect of our daily lives. Today, it's not just a retailer but a technology company, a logistics giant, a cloud leader, and an entertainment force. Amazon's journey from humble beginnings to a trillion-dollar company is a testament to relentless innovation and bold ambition. While Amazon is best known for dominating e-commerce, its real profit engine is Amazon Web Services, or AWS. AWS is the undisputed leader in cloud computing, powering everything from startups to Fortune 500 companies. This business generates high-margin, recurring revenue that not only supports Amazon's core operations, but also fuels its expansion into entirely new industries. AWS's high-margin, recurring revenue funds Amazon's expansion into new markets. The cloud division's profitability gives Amazon the flexibility to invest aggressively in innovation, research, and infrastructure, keeping it ahead of competitors and enabling it to weather economic downturns better than most. Beyond cloud and retail, Amazon is also a digital advertising powerhouse. It's now the third-largest digital ad platform in the world, trailing only Google and Meta. This business is growing rapidly, as brands flock to Amazon to reach consumers at the very moment they're ready to buy. Their ads reach shoppers with high purchase intent, making this a fast-growing, high-margin business. The unique advantage here is that Amazon's ads are integrated directly into the shopping experience, driving both sales and advertising revenue simultaneously. In healthcare, Amazon is shaking up the industry with Amazon Pharmacy and its acquisition of One Medical. These moves signal Amazon's ambition to disrupt a multi-trillion-dollar market, making healthcare more accessible, affordable, and efficient for millions of people. Amazon's logistics network is another underappreciated asset. With a vast fleet of delivery vans, planes, and warehouses, Amazon rivals UPS and FedEx in scale and efficiency. In fact, its logistics arm is so advanced that it could soon become a standalone business, offering delivery services to other companies and opening up a whole new revenue stream. Prime Video and the acquisition of MGM Studios have made Amazon a major player in streaming and entertainment. With exclusive content, original series, and a growing library of movies, Amazon is competing head-to-head with Netflix, Disney+, and other streaming giants. Amazon isn't just one company, it's a collection of dominant businesses under one roof: e-commerce, cloud, advertising, healthcare, logistics, and entertainment. Each segment is a leader in its own right, and together, they create a powerful, diversified ecosystem. This diversification is a key strength. If one area faces headwinds, another can pick up the slack and drive growth. It's like owning a portfolio of high-growth companies, all within a single stock. Prime membership is the glue that holds much of this ecosystem together. It fuels e-commerce and advertising, while AWS profits fund new ventures, a virtuous cycle that keeps Amazon's flywheel spinning faster and faster. Despite all this, the market still undervalues Amazon's sum-of-the-parts potential. Many analysts believe that if Amazon's businesses were valued separately, the combined worth would be even higher than its current market cap. Major trends like the ongoing shift to e-commerce, rapid cloud adoption, the explosion of digital advertising, and the rise of artificial intelligence are all powerful tailwinds for Amazon. Each of these trends is expected to accelerate in the coming years, providing Amazon with multiple avenues for growth. Artificial intelligence is a huge catalyst for Amazon's future. AI powers everything from personalized shopping recommendations to advanced AWS services, logistics optimization, and even content recommendations on Prime Video. As AI technology advances, Amazon is poised to benefit across all its business lines. Under CEO Andy Jassy, Amazon is laser-focused on profitability and operational efficiency. Jassie's leadership is driving margin expansion, cost discipline, and a renewed emphasis on long-term shareholder value. Of course, there are risks. Regulatory scrutiny is intensifying, and competition from giants like Walmart, Microsoft, and Google is fierce. But even if regulators force a breakup, it could unlock even more value for shareholders by allowing each business to shine on its own. What sets Amazon apart is its relentless innovation and massive scale. From pioneering one-day shipping to developing cutting-edge robotics and AI, Amazon has consistently stayed ahead of the curve for decades. Buying Amazon isn't just buying a stock, it's buying a piece of the future across multiple industries. Few companies have the reach, ambition, and resources to shape the world the way Amazon does. Amazon operates with a market capitalization of about $2.476 trillion, a price-to-earnings ratio around 32.77, and earnings per share near $7.07. In 2024, Amazon reported about $637.96 billion in revenue and roughly $59.25 billion in net income, underscoring how a mega platform can translate massive revenue into substantial bottom-line power when efficiency and higher margin segments do the heavy lifting. For long-term investors, Amazon offers a unique opportunity, a diversified growth portfolio, all wrapped up in a single stock. It's a rare chance to participate in the growth of several high-potential sectors at once. The story is far from over. Amazon remains one of the best opportunities for the next decade. As technology evolves and new markets emerge, Amazon is positioned to lead and capture value at every turn. If you want exposure to tech, retail, cloud, healthcare, entertainment, and more, Amazon is a must-consider for any forward-thinking portfolio. Let's wrap up with a quick recap of why Amazon stands out as a top pick for long-term growth and innovation. There you have it, 3 stocks with the potential to deliver outstanding returns by 2030. Vertex Pharmaceuticals, TJX Companies, and Amazon. Each offers a unique edge, strong growth prospects, and a proven track record. Remember, building wealth is about patience, discipline, and letting great businesses compound over time. Which of these stocks do you think has the most potential? Let me know in the comments. Don't forget to like, subscribe, and share your thoughts below. Thanks for watching. And 𝗗𝗜𝗦𝗗𝗧 𝗖𝗢𝗗𝗗𝗘𝗧. Happy investing!